A speculation bubble in Delhi NCR property market. The property market across the Delhi NCR region is sitting over a speculative bubble. However, one may deny or sugarcoat the reality, the fact remains that there is stress in the market. A kind of a stress that is keeping the genuine home buyers out of this artificial cartel of luxury launches and price appreciation. When I said about a possible price crash, every vested interest of real estate got hyperactive. After all, they have a skin in the game. Deep down, they know the shaky ground realities and hence they are jittery. They feel even one spark, as simple as the assessment of a journalist or YouTuber, could shake the foundations and hence try best to dismiss my assumptions. I am Ravi Sinha, and what I have noticed in the last couple of months is that more and more analysts who don't have skin in the game are now talking about a speculative bubble, if not outright price crash. But wait, even those who have skin in the game and are into luxury property are talking about speculators in the business and the need for them to exit the market. It's a different matter that they are themselves selling highly inflated and speculative properties above 100 crore. I think you will guess who I'm talking about. But then real estate in this part of the world has always been known for its double speak. Over the past 2-3 years, property markets across Gurgaon, Noida, Greater Noida and Ghaziabad has witnessed a dramatic surge in prices, record-breaking pre-launch sellouts and a flood of new project announcements. At first glance, it appears like a booming market driven by strong demand, but those who have spent years in the property market and, more importantly, understand the economy and demand supply cycle believe the market is mistaking a speculative frenzy for genuine end user demand. A classic hallmark of a speculative bubble. There is an illusion of demand. A growing chunk of units in new launches are being bought not by the people intending to live in them, but by flippers. Speculators looking to book a unit and sell it for a premium even before possession. Yes, investors are back in the market. Their activity creates the illusion of high absorption, prompting developers also to increase prices phase after phase. But this is not a sustainable demand. Worse, it sends false signal across the real estate ecosystem. Developers overbuild based on fake momentum. Banks loosen credit norms, misreading the risk. End users join late, chasing the mirage of a price appreciation. In the end, everyone suffers, but the poor home buyer loses everything. Whatever savings one has and is burdened with a liability of home loan. Home loan for a home that no one knows will be delivered when. Worse even, whether that will be delivered or not. Question is, why are we ignoring the market fundamentals? Rental yields have once again dipped below 2% in many micro markets, because of artificial price appreciation. Post-COVID, it has gone from 1.5 to 2% to even 3%. Loan rates at around 8% reflect an alarming mismatch in terms of affordability with the given benchmark of price to income ratio. No house is available in any given city below 10 years of your gross income. Indian average anyway stands at 11 years as against the global benchmark of 5 years of gross income. A track to realty research suggests a significant percentage of recent inventory is held by high net worth individuals, non-resident Indians and flippers, not by the end users. Deferred payment plans, buyback schemes, profile financing and under the table premiums are resurfacing. Reminders of a cycle we have seen before. Unlike the 2013 to 2020 slowdown, this time the bubble is amplified by social media as well. Property influencers, brokers and developers are all aggressively using digital platforms and highly stylized aspirational imagery to fuel FOMO, fear of missing out, and hype, often masking the true depth of demand. This is a major differentiator and a compounding risk factor. What could trigger a price correction? Corrections don't happen overnight, but they do. They do come mostly at the peak of speculation frenzy, when speculators try to exit en masse and find no real buyers. Construction delays or liquidity crunches break confidence. Macroeconomic headwinds or policy shifts trigger panic or risk aversion. In such an environment, price stagnation quickly morphs into correction, especially in investor-saturated corridors like Dwarka Expressway, Southern Peripheral Road, Golf Course Extension, Noida Extension, Siddharth Bihar, and many other micro markets. A note of caution is needed here. This is not a doomsday prediction on my part. And I have always maintained that even I don't want to witness a price crash, not for the sake of builders or any other real estate stakeholder, but for the sake of common man. But it is a call for prudence. Buyers, brokers and developers must pause and ask, are they buying and selling houses or trading commodities? Is it meant for people who will live there or for the next flip? Having seen multiple cycles, one truth holds. Real demand always returns. After all, in a 140 plus crore country, there is always demand, need and shortage of homes. But the demand is back only after speculation clears out. The macroeconomy is bright. Job market is booming and there is real positivity and not misleading fly-by-night optimism. Also, the revival process does take time. Remember the period of stagnation between 2013 to 2020. Property market of Delhi-NCR is today definitely not grounded in fundamentals. Even the grounded developers from Bangalore who have entered into Noida and Ghaziabad are not grounded in this part of the world. They are launching exorbitantly high-priced housing projects that is clearly investor and speculator driven. Maximizing profit is all right in any given business, but not at the cost of buyers' affordability. Property prices at 15,000 to 20,000 per square feet in Noida or Ghaziabad is definitely not sustainable, keeping in mind the lower jobs and wage growth in the region. From the standpoint of end user buyers who can afford to buy a property today, it is only the top 1% demography that is the real buyer in today's market. And there is a limit for that rich class to buy, even if one is buying multiple properties to park his money. The top 8 cities today have more than 1 million unsold housing units. This number could double up if we have data of 30 cities across India. But who knows the real number of unsold stocks pan India? After all, the research reports in the sector are also rigged, with brokers posing as property consultants and manipulating data as per their own convenience or the convenience of the client, that is builder. More importantly, developers' greed to launch new and luxury housing is yet to meet with a reality check. Are developers listening? No. They feel momentum is in their favor, and if speculators fail to pay on time, they will stop the project midway and blame it on market conditions and cash flow issues. After all, this is what they are good at, have been doing so for decades now. What will happen? RERA will keep extending the project timelines and the government will reluctantly offer them a stress fund. But then, as a genuine home buyer looking for a house, it's time you stay out of this speculation bubble. Go for only ready to move apartments and evaluate its real price in the secondary market, or else you will be one more face among the many faces waiting anxiously for their dream homes for years now, and builder is playing the game of tarikh pe tarikh in the court of law, with multiple litigations to drag the cases for years. Choice is yours. I rest my case. Thanks for watching and stay safe.